What do you think is the probability that we see $50 silver in 2021? Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Happy holidays. I hope everyone's doing well out there, safe and happy with lots of silver coming their way. And fortunately, I'm joined by Chris Vermeulen of the technicaltraders.com, one of Eric Sprott's technical analysts of choice. It's a nice little arrow in your quiver there, Chris. I hear him mention you pretty often. So nice to see. Obviously, your work has been out there quite a while, and appreciate you joining me in the holiday season. Let people know what's going to happen in 2021 for silver now the year's wrapping up. So welcome on in, and how are you?
I'm good, Chris. Happy holidays to you, and thanks for having me on the show. Yeah.
Well, thank you. I appreciate you being here. And perhaps just to kick it right off, what would, and in whatever context you want to answer this, but what are you expecting silver to do from a technical perspective throughout 2021? And I'll let you take it from there.
Sure. Well, I think it's going to be a wild ride. Maybe not all to the upside. I think we're still going to be in for some pretty wild price action, which could be to the downside. Really depends on how COVID's going to react. This wave 2, strain 2. A lot of it's going to come down to how bad this second wave gets, and obviously this second strain in Britain, now in Africa, and who knows where else it's gone. 70% more transmittable, supposedly. It's kind of scary. So this market lockdown, this global kind of lockdown, could get worse and could last a lot longer than we think. So I'm worried that we're going to see that drag out like another quarter or two of severe lockdowns, which means lots of stimulus. If we get panic in the market, it's going to hurt the stock market, and it could hurt the precious metals market as well, because panic selling creates liquidation. People start to sell everything. But I don't think we're going to see that type of panic this time around. I think the stimulus, the governments are going to have to keep America going. Just money getting pumped out constantly. And of course, the picture for precious metals is really good. So I think we're looking at a choppy year, but I think we're going to close the year out next year, and it's going to be significantly higher when we look at gold, silver, and even platinum is on the verge of a major breakout to the upside. So I'm definitely bullish long term here.
Yeah, and Chris, in there you mentioned stimulus for COVID, and I guess we'll get to the technicals in a second. There's so many interesting ones you already brought up. So I don't claim to be a biologist, but just we saw what happened to the silver supply chain the first time. There was a rush of buying. Mm-hmm. It was harder for the mint and the distributors to get it there. Silver Institute now has a report out, because in addition to the mines being shut down, I don't know if that will happen again. Let's certainly hope not. But the first time the mines were shut down. So now Silver Institute has a report projecting a 318 million ounce deficit. So again, I very much would hope that the world does not get shut down. But how do you price that in? And what would you expect if there are, I guess you're in Ontario, you mentioned, and you're getting what's happening there?
Right. So the day after Christmas, they're shutting the province down as a lockdown. No essential business is allowed to run. So only the grocery stores, I guess gas stations. It's just there's a handful of businesses that are allowed to run. So we're going into pretty much full lockdown. No groups. You're not allowed anybody but your immediate family at your home. And it's going to last for 30 days. But they said this last March, it went on for month after month after month. So who knows where the other side of this dark tunnel is going to come out, probably in the spring somewhere, where there'll be green flowers starting. But it's going to be interesting to see how that plays out going forward.
You can hear, I don't know if you guys picked up Nibbles in the background barking at that government policy. It's incredible. The government canceled New Year's Eve for you guys, it sounds like.
More or less, yeah. They let Christmas slide in.
They let you have Christmas. That was safer from COVID, so that's certainly good to hear.
Yeah.
I'm wondering how that will all shake out, because again, I know it's a sample size of one, so we don't know what will happen, but certainly a lot of pressure on the markets last time. But Chris, I'll pull up the chart. We're recording on Wednesday of this holiday week. So actually up 56 cents today, even if it doesn't feel like it. First of all, I'd be curious, what does, in terms of technical analysis, what do you make of that?
Yeah. Uh, I guess like when I was watching it fall, uh, that was yesterday, I think it was, or the day
Was the
before.
Monday chart?
Yeah, the panic selling with the vaccine, the strain. When I was watching it fall, I mean, that's fear. And that's what happens. That's what happened last March when we saw the metals fall. When there's a certain level of fear in the market, once you hit a threshold, people just start to liquidate. They panic. And that's what you get. That's what we saw. That was a very quick panic versus, a month-long sell-off that we saw earlier this year. And that's what I'm afraid of happening again. It'll affect precious metals if we get to that level of fear, but something that drags out. The nice thing is we know what COVID is. There's a vaccine. If they've made one, they can make more. So there's going to be the occasional quick spook where everybody jumps and sells like that. But overall, I think we're going to be okay in the grand scheme of things. I know when we probably hear about the strain spreading and the new strain in the US, we'll probably see the markets have a little bout of selling. But again, I think it's going to be short-lived because we know what we're dealing with now. First time around, we had no idea.
Well, certainly let's hope so. And then looks like we're at least with a week left or so in 2020, around the $26 mark. We went from 18 to 29 down to 22. As floated around here, I love the wild, volatile moves in silver, like massive historic volatility, and then just sits there and flutters and like,
yeah.
Well,
I can show you my charts here if you want to get a big picture view of a couple different plays here.
And do you have any targets for 2021, or actually maybe you can mix in some way into your presentation there? What do you think is the probability that we see $50 silver in 2021?
I think it's very likely. I think that's where we'll be headed. So I can show you based on this pattern. So this is a daily chart of silver. Back over here was the March crash where panic hit the market, just like that chart you showed me, except for this was panic that lasted 6 or 7 trading days versus a quick little morning spook pre-coffee. So if we take a look at this chart, and I just applied basic technical analysis, which is a Fibonacci extension, we can take this low price and we take the run up, which is how much power it had. And then we go to these lows over here, and then we just click, and we can zoom this chart out to get an idea where silver should be heading. And based on this pattern that we're in right now, silver's got potential to run 100% measured move right up to $40, which is a 54% rally from where we are. So there's a lot of upside potential, not quite the $50 mark, but that's where this pattern is pointing to. And when you look at this pattern, it took 1, 2, 3, 4, 5 months to climb, 1, 2, 3, 4, 5 months to base. It's starting to break out again. So look, 4 or 5 months from now, we could very potentially be hitting this $40 per ounce mark, which is, early mid next year. So that's kind of what the silver chart is doing. And I like to look at the monthly chart. This is like a big, 35,000 foot view kind of looking down on silver. And if we were to look at the silver chart, actually, you know what? I'm going to go back. Let me show you gold first. So here's what gold did after it puts a multi-year basing formation. So if you look along the bottom of this chart, we've got 1, 2, 3, 4, 5, 6, 7 years gold traded sideways after the 2011 market top. Well, when something breaks out of one of these multi-year bases, you see a very strong run that lasts a long time. And so gold did this back in 2019. It led the way higher. So now if we take a look at silver, silver did the same thing. So zoom in a little bit more here. And more or less, if we were to just draw a line across these significant highs from over here, there's lows, there's highs. It's a little bit noisy of a chart, but you can see we had the breakout and we had the first big run. And now we've come down to this first measured move, this pullback level, which I was expecting this price to get tagged. And now we're starting to move back up. And the first pullback within a bull market like we're in here is a great buying opportunity. This this is pointing to a very big rally going forward. So silver's got a lot of potential to get back up to this 40 range, which is going to be flirting with these highs over here. So definitely silver this year started a new bull market. I'm really excited about silver. And just to take it one step further, if we actually could take a look at platinum, here's the platinum chart.
I'm a big platinum fan too.
Well, yeah. Okay. So here's the platinum chart. If we just go across from roughly these highs, there's highs here that traded through it, a high, some more highs. And early December, we broke through it. We were breaking out of this multi-year, it's like a 4 or 5 year basing formation. It's pulled back down. But when we get a monthly close above this blue line, which is roughly the 1,050 mark, when we close above there, platinum will be the next precious metal to start a bull market. So I would expect a multi-month rally, month after month to the upside. So there's a lot of, I think, potential there. And a lot of people haven't followed platinum. I mean, it seems like a sleeper. Not many people talk about it. That's when bottoms are formed because they forget about it. They're not interested in it. And that's when they kind of start to break out behind the scenes. And so I think platinum could be a really good trade next year. Percentage wise, I think it's got room to move, probably 40% pretty easily. 1,400 mark it could get to. So there's a pretty good move there for platinum going forward too.
Yeah, interesting because platinum, I believe the all-time high was 2,300 back in 2008. Coincidentally, a week or two before the Bear Stearns JP Morgan deal, which I'm sure had nothing to do with it. But Chris, one thing I've actually been thinking about for a while, love to get your take on this one. If you can back silver out, maybe back to 1975.
Oh, I don't think this chart goes back there. Let me just see. I don't have the data to go back there on this chart.
Well, that's okay. I mean, I think people remember we hit $50 in 1980, and then we got up to 49 and change in 2011. The fact that, I mean, it didn't get to 55 or 45, I'm assuming that's not just a completely random coincidence. I'm guessing that from a technical perspective, you would consider that a resistance level.
Mm-hmm.
A, any thoughts on that? And B, if we reach a point where silver finally breaks through 50, I've wondered, do you see a gap up from there? Because that would, to me, it would be historic. I don't know, maybe if the rest of the world agrees with that, but what do you think about that?
I think $50 is definitely going to be a pretty significant resistance area, obviously, because it pretty much got up to that over here in 2011, but it could very easily do, I think, what Bitcoin just did. It goes up to one of these big spike highs, has a quick little pullback. There's a lot of people who bought up there and people who say it's going to be a double top, and they hit the sell button and they create an initial quick pullback. But I think once it gets up there, it could very much do the same thing where it just tries to eat through that resistance, those naysayers, and then eventually it breaks through and then it runs. And I mean, from there, it's really probably going to be going to $75 or $80, and it's going to go into a real parabolic takeoff from that level. So I think once we break 50, it's going to be kind of not a whole lot of overhead resistance. It's going to naturally want to go up, and it could come with the whole thing that maybe mines are shut down. It could be sooner than we think. You never know. If mines get shut down, there's going to be a huge demand. Currencies start to collapse. All this could actually happen, these ridiculously high numbers for gold and silver in a very short period of time. And you almost want to be ready to sell in case it hits those values, because it'll be a fear-based spike that might not linger around at those lofty levels for a long time. So there's going to be definitely some levels you're going to want to pull some money off the table, because what goes straight up typically comes straight back down, at least for half of that move. So that's my rule of thumb.
Yeah, although Chris, when we look at gold, we see 1980 was 850. Double that would be 1700. We're more than a double. Silver is still at half of its level.
Mm-hmm.
And I think what you're saying about, when things go straight up, unless there's a reason. But I mean, we've also seen, we look at the debt clock, that's going straight up. Fed's balance sheet. So with gold still over twice its 1980 high. I mean, gold's over its 2011 high, where silver is still at half of both of those. I mean, I'm guessing if one day we had silver at double its 1980 high, there's probably a lot of people watching this that would be quite happy.
For
But
sure.
what do you make of all of that?
I mean, when you talk about something going straight up like the debt bubble, I mean that's not something that's traded off emotions. It's not people piling in, piling out. It's just a bunch of people just spending tons of money. The same people. It's not people like rushing into something and then rushing out of it when it starts to roll over. So there's not quite the same, but I get it. I think the world is into this point where people are realizing more now than ever, although it's very slow process, that fiat currencies just aren't the way to go. They all fail eventually. The dollar, I think, may have had its time. And metals, I'm saying you should pull some profits off the table. I'm not saying you exit the play. I think precious metals are something you need to have forever as an insurance plan, as a hedge, in case things really do collapse in a terrible way. You're going to have your metals, skyrocket in value. But you definitely need, as a trader, you definitely need to be pulling some money off. And I think we're going to see lofty, $3,000 gold. We're probably going to see that $80, maybe even $100 silver eventually. But it's not going to be a straight line, and it could take a while to get there. For all we know, it takes 5 or 10 more years, or it could be there by July this year because all kinds of craziness happens in the world. We have no idea. But the chart is saying we're in a raging bull market. If you look at this chart, silver can go from 17 to 50 in a very short period of time. And I think we're in a scenario more now than ever that it could go a lot more parabolic for a lot longer, straight up. So it's going to be a wild ride, and it's just really exciting for people who are holding physical metals, because I think that's the only real safe play, is to actually have it physical versus these traded pieces of paper. And
You're not asking Santa to load you up in the new Goldman Sachs Perth Mint ETF?
No.
Chris, it's interesting you mentioned how it happened, how something could happen quickly. Again, to be clear, I'm not saying this will happen but just what I looked at was in 1980, I think it went from 24 to 50 in under a month. The move was very quick, even as quick as 2011 was. It was much quicker than that. So I know what you mean. These things, we're kind of in a little bit of uncharted territory. So
For sure.
will be interesting. Chris, also, what do you make of how gold and silver trade in tandem so regularly? It's like that chart we looked at of silver on Monday, you could pull the gold chart. It's basically looks the same. Should they be that correlated?
I typically see them fairly correlated. I mean, they move together. Just silver seems to wiggle a lot more. I mean, when you look here at the gold chart, gold has been kind of flagging and waving its way down. It's making a series of lower highs. It's making a series of lower lows. So it's channeling its way down. It's definitely not in a short-term uptrend at this point. It's still it's going lower. You don't really want to own it just yet as a short-term trader. When you look at silver, it's a bit different of a story. We're trading between these kind of levels right through here. We've got it's held this level, it's held this level. We've got this resistance level up here. It's, instead of it channeling down, it's trading between these floors and ceilings. And so we're back above this kind of critical level. We're back above a bunch of moving averages and resistance here. And so silver is definitely showing signs of leadership. We've seen silver be the strongest asset a couple times in the last few weeks. I think we've seen it 3 times. It was the strongest moving upside asset for the day. And that's a really good sign. And we're seeing the silver miners do the same thing. I really like the silver miner as a trade. And so you look at silver today, I mean, it's having a nice move. It's trading up near the highs of the day, right off a nice support zone. And this was the one thing I wanted to show you earlier, was if we take a look at this price action that we saw right here on Monday's news, in this blue box, we had a really big range day, huge rally in the morning, vaccine hit, or the strain news hit. So it crashed way back down. So it rallied 6%, and then it fell 9.5% from the high, and then it closed back in the middle of the range. And it's nice to see it do that. and now we're just kind of shaking off that news, pulling back. Well, we had a very similar type of thing happen right over here. We ended up having news. It ran up, it crashed back down, and then recovered. And then it takes a couple of days to shake that news off, because remember, the average trader investor is about a 2 to 3 day delay before they see it in the news the day after. They get home, they call their broker the next day, or their advisor places it the next day. And that's why we see, over the next 2 or 3 days, we can see these moves to the downside, because there's a little bit of downward pressure. And then eventually, once that wave of weak positions have left the market, then it can continue in the uptrend. And so that's what I'm looking for here, is for this move to continue up back to this 29-30 levels, the next kind of resistance area. And then hopefully we'll see, breakout in 40. And a lot of people, I think, will jump on ship here and chase and push silver higher. So as a short-term trader, I'm really liking these charts. Yesterday's pullback was awesome. You look at the 10-minute chart or the 5-minute chart, and people were panicking on Monday. I say yesterday, but on Monday's vaccine news, watching that panic sell-off was great. When people are panicking out of a position, that means it's almost put in a bottom. It's cleanses the market. So I like silver. I like silver miners, and that's where I think we're kind of headed over the next 4 to 5 months, is that $40 ounce for silver.
Yeah, and Chris, you mentioned how at certain levels people pile in. I've wondered if the banks, some of the ones that are now convicted felons and precious metals spoofers and whatnot. My feeling, and I talked with this a little bit to Bart Chilton, where it's like they know where and from my own experience when I was back at Wharton and I would interview with a lot of these banks, on the public, they say, yeah, we're just facilitating customer orders. Everyone wanted to go there because they knew it was an internal hedge fund. It was like playing poker, and you could pile stuff on. And, in those JP Morgan confessions, we heard they were doing it all at the expense of their customers, screwing them to their face, just like Goldman Sachs sold a shitty deal to their customers. So I guess the question in there is that maybe there's not a specific answer, but they hold these customer orders. They know where the stops are, and there's certainly Ted Butler writes a lot about how it's like you see the banks get flat. Usually there's a big move in the price coming when the banks get really short. So who's on the other side of this? Is there anything that we can learn from that? I mean, I think often, well, all right, it's unfortunate it's a rigged market, but if, just the same way, if the banks are gaming what somebody else is doing, and then you can, in a legal way, extrapolate, okay, these guys are rigging it. What are they looking at and get a step ahead? Anything you can touch on there?
Yeah, so I get it. I mean, we all know the markets are rigged, precious metals for sure. But when I go and I watch the short-term price action of something when it's selling off, like silver, that the Kitco chart you showed, I mean, maybe you think that's manipulation, and maybe it is. But I see that same type of price action happen in individual stocks all the time. And I've created some indicators that tell me when there's a certain volume flow of panic in the market. And whether it is manipulation or not, we never know. You can never really fully prove it. But when there's that type of flow and I see panic, I call it panic selling. I could call it the manipulator indicator, who knows, whatever. But when I see that selling and that manipulation, my system starts to light up, and it says, hey, we're in a strong uptrend. This is running all the stops. It's pushing it beyond where it should be going from a technical standpoint on a very short-term basis. And that's when my system lights up and says, hey, this is a buying opportunity. That's what happened on Monday's washout low. You get these manipulation or these washout. It's really just shaking everyone out. All the stops, they get triggered. It creates that waterfall effect of just straight down. And then who gets the other side of that? I mean, people like me who are watching it, you can get in knowing there's a pretty good odds that is going to come to an end very shortly. But maybe the big institutions are, they're unloading their clients, letting them they're running the stops, and then they're on the other side catching all those shares, picking them up. So I'm not too sure exactly how to take advantage of it, other than to follow it closely and try and trade it.
Well, which fortunately you do for people. And perhaps tying in there is, and you can mention folks and let them know what you offer and the services you have. Although I guess tying in with that question, should people be trading silver? Or I don't want to use the should word, but I mean, is it best in most cases just to get whatever physical seems appropriate and leave it there? Is trying to trade these silver markets, is it something that a retail person can do without getting in over their head, or is it more suited just if you're advanced or an institutional trader?
I think silver is a tough one to trade. Silver and gold, the way they kind of move, I mean, they really can shake things up. They have an extra level of confusion to them because sometimes you'll see metals move up with the market. Other times you'll see it move down with the market. And then other times you see gold and silver rally while the stock market sells off. And so you never know which mindset the bias is for the market at any given time. Is it going to go with or against that play? So you've got this extra wild card. I wouldn't really trade silver. I wouldn't tell someone new to trade silver. I mean, I don't trade it that often. I just look for these bigger setups, try and take advantage of them. But it's a really tough market to move because when it moves, it just pops. And in a couple minutes, the majority of the move is done. And the markets, you could say, are manipulated, that most of the moves are done just before the market opens anyway. So it's always going to have these nice big moves, but it gaps higher. And the average investor has to buy it at that premium versus it opening lower and then rallying up with real supply, right? Real demand. So I would steer clear of it as a short-term trader. I really like the indexes. I'm trading indexes and sectors with ETFs because you can really catch the momentum of equities. You don't have to deal with, is it a safe haven today and not a safe haven tomorrow kind of aspect. So, I mean, holding physical metals everyone needs to have some bars stored away for sure.
Would you say it's safe to think of it in the same way we use the phrase money in the bank? Well, now when you look at these banks, I mean, they need a bailout every couple of months or they're insolvent. FDIC, I don't know where they're going to come up with their money from, and let alone the inflation. So that's what I think is the travesty, that for people who aren't, trying to be a hedge fund genius, it's like the supposed safest options have become the most toxic. And if someone thought about silver, if you forget, like, well, I need silver to go to here or there tomorrow, would that be a better way of saving?
I think so. I think metals is money in the bank. Just don't keep it in the bank. I don't trust the banks as far as you can throw a 1,000-ounce bar. So so definitely you've got to store it, keep it buried away somewhere, store it in a third-party vault, keep it away from the government and all those audited facilities. So money in the bank. Trading them is a different story, totally different game.
Well, I appreciate that. And Chris, perhaps just in wrapping up, you can let folks know if they would like some guidance. I know you have the newsletter and a bunch of stuff. Where can they find that and what will they find there?
Sure. Yeah. If you want to get my morning video analysis every day where I cover all the metals and the miners, including the indexes and whatever the hottest sectors are, you go to thetechnicaltraders.com. And I've got a newsletter there. A few different newsletters. We trade anywhere from long-term investing signals right down to index trading to options, stocks and options. So we've kind of got everything covered there. Everything we use is technical analysis. We use, proven strategies that are repeatable, and we can just keep, pounding out the trades every time there's a setup, and we don't get caught up in the everyday kind of market volatility. And you just kind of follow our lead. We show you what's going on, why it's happening, or why we think it's happening. And you can piggyback right off our trades. So pretty straightforward. Anyone can really do it. You just pick the how active you want to be, the service that fits your style, and go from there.
Well, Chris, I appreciate that. I also like your approach as someone who's studied a lot of marketing, where just what you said there, that for options, not everyone's the same. And I think when people find something that they are comfortable, not what the guru is comfortable with.
For sure.
Good starting point, and I like your approach there. So, Chris, thank you for joining me. I hope you have a happy New Year. I guess we know where you'll be, but it sounds like you're having a blast and doing a lot of great things, digging through the charts there. So, at least you'll be able to keep doing with the great research you're doing. And thank you for joining me again today.
Yeah, thanks, Chris. Take care. Have a good one.